Hello, everyone. My name is Richard Fetko, and I am the CEO and founder of Altfins, as you know. Let's go ahead and get started with lesson number 8, where we'll talk and practice trading chart patterns. This is a continuation of the knowledge that we learned in the prior lesson, lesson number 7, where we talked and looked at trading key levels, which is also a form of a pattern approach and the breakout of key levels, horizontal key levels, resistance and support. And today we're going to look at some more advanced pattern setups, such as triangles, wedges, and so on. These names I'm sure you've come across many times before, and today we'll take a look at the ways you can leverage Altfin's platform to find such trade setups, as well as sort of some theory and technique and psychology behind the patterns as well. So patterns, why do patterns form and why do they work? Again, patterns are just a reflection of what's going on in the marketplace between the demand and supply, or between the buyers and the sellers, and the dynamics between them as they battle and buy at certain levels that appear attractive, and then they sell at certain levels that greater than majority of the traders find as expensive. We'll find some battle lines, and these will form basically trend lines, areas where the buyers step in because it appears cheap, and areas then and zone or levels where the sellers step in. And so as these battle lines form over time, they form a certain pattern, and that reflects really the psychology of the sort of the supply demand picture and or dynamics in the market. And we'll look at those as well, a number of those examples. But again, as the slide indicates, price patterns appear when traders are buying and selling at certain levels, and therefore the price oscillates between these levels. These levels are called trend lines. And in these cases, they're not support horizontal or support or resistance levels. They are typically slanted at an angle or a slope. And so as the price oscillates between these levels, they create chart patterns. And when the price finally does break out of the price pattern, it can represent a significant change in sentiment. So we'll look at some of the chart pattern types. We'll also once again review what is emerging versus completed pattern. We talked about that a bit in the last lesson. We'll also look at some of the historical success rates of various pattern types, and we have a chart pattern cheat sheet for you as well in this presentation that we'll share later. All right, so let's go ahead and review once again what's an emerging and what's an emerging versus completed or a breakout pattern. The best way to do that is we go to the platform, go to the patterns section, and let's look at some of my favorite pattern setups are ascending triangles, for example. And so this one in the middle here, that's an emerging one because the price indeed is oscillating between the support trend line and resistance trend line. As you can see, every time or several times that the price reached or spiked up, it sold off at around that 80-cent level, and then bounced back or was rejected and traded back down to the support trend line. But as you'll notice, in this case, this is an ascending chart pattern, which is formed by a relatively flat or horizontal resistance trend line and an upward sloping support trend line. But as you'll see, the buyers are willing to buy it up or step up increasingly at a higher price. The sellers are consistently selling it at 80 cents, but the buyers are more and more eager or anxious to buy it at a higher and a higher level, which forms that upward sloping support trend line. And that is forming the ascending chart, ascending triangle. Now, it's an emerging triangle because the price is not broken out of it. It's not a completed chart pattern. It's an emerging one, but totally tradable. In fact, these are just as successful trades as the breakouts, and I often prefer them. There's a lot of false breakouts that make the breakout strategy sometimes trickier, but these sort of approaches or emerging patterns have very good success rate as well. And so right now, the prediction or the expectation is that the price has bounced off again from the support trend line, and again at a higher level than previously, and is expected to continue to rebound to the resistance level. And at some point, the price breaks out. And we can see an example of it right here. Now, this is an ascending triangle that has formed over a very long period of time. This is from April of this year, so we're talking months, right? 7 months. And what the system, so these patterns, by the way, are generated by the automated pattern recognition system. That of course is not perfect. Sometimes the patterns are not what you would expect, perhaps, but it does a pretty good job, I think, for the most part, at identifying various patterns and greatly helping even the beginner traders with pattern trading or chart pattern trading, whereas that normally is a technique or a trading strategy that more advanced traders would do, because it takes time and experience to visually identify the patterns. The automated pattern recognition system does all the, a lot of the work for you, and therefore, it's still a sort of an art and science, but it really sort of reduces the art part of the pattern detection and really applies more and more science to it. But in this case, the system indicates that there's been a breakout from the ascending pattern, with the expectations that the price will then continue in that direction of the breakout, and also in the direction of the overall trend, up to that target area of 93 cents to $1.15 or so. But that's a completed or a breakout pattern. You can, again, trade both emerging and a breakout. Now, with emerging ones, of course, as the patterns typically, if they're triangle patterns like ascending triangle, descending triangle, or just a symmetrical triangle, then the trend lines are converging gradually, as you can see here. They have been converging, and they're expected to continue to converge to basically an apex or a pinnacle. And so with emerging ones, what you want to, of course, make sure is that there is enough width to make it worthwhile to trade. If we're in the late stages of that pattern and we're really in the very close to the pinnacle or apex, there may not be enough opportunity to really take advantage of. But in this case, we're looking at a potential profit of 39%. Now, so that's the difference between emerging and completed patterns, and that is the same with any other pattern that we have. Really, you have emerging ones and breakouts. Channel up, for example, this is a breakout. It's a breakout to the downside. Price is broken out from the channel up formation. Here, this channel up is still emerging, and it's bounced off of the support trend line and is expected to continue in that direction. So again, both emerging and the breakouts are totally tradable opportunities. Now, our system recognizes about 16 different types of patterns, and they're listed here, as well as, of course, listed under the types right here. You can scroll, and what's also important is to realize that some patterns are inherently bullish and some patterns are typically bearish. Now, a pattern can break out either way, right? An ascending triangle, for example, is typically a bullish pattern, because even psychologically, you can see what's happening here is that the buyers are gradually stepping up and buying it higher and higher, while the sellers, are offloading or trimming their positions at a certain resistance level. But it's a bullish pattern that it has an expectation of breaking upwards or bullishly above the resistance level and continuing in that direction. Whereas the opposite, but having said that, it could very well break downward. Okay, and traders who just trade breakouts typically will then wait for the breakout, right? They won't necessarily anticipate. So like when we're trading this emerging pattern, we're not trading with the expectations that it's going to break up to the bullish side, and that's why I'm buying it. No, in emerging pattern, I'm buying it because I expect the price to go to that resistance, and that's where I would exit. I wouldn't wait for a breakout, right? So we're not anticipating a breakout here, even though typically ascending triangle is a bullish breakout or resolves in the bullish breakout, but that's not why we were getting involved with it in an emerging stage, because it could break out to the downside as well. And so it's the other rule is, of course, that you want to continue, as I always emphasize, and I will continue to do so, is trade with the trend. So like here, nulls, if we click on this image, we can very quickly assess the trend, and you can see here that it's our trend rating system ranks it as up on the short term, up on the medium term, and down in the long term. I would say the medium term is the most critical one, which indicates that it is trending up. So getting involved with this triangle and buying the emerging triangle would be trading with the trend, which is what we want. So that's always still a good check to make. But again, certain patterns typically will have bearish breakouts, and you typically want to, if a descending triangle like we have here, if it has a bullish breakout, that's not something we would normally trade, unless it's in line with the trend. But descending triangles typically have, here we go, descending triangles typically resolve to the downside, as you can see down here. Let me highlight that, right? No matter where they form, whether it's in the uptrend or a downtrend, they typically resolve in a down and break down, okay? Whereas certain patterns like ascending triangle are typically bullish, right? And then in other cases, for a falling wedge as well, typically bullish, double bottom, bullish, inverse head and shoulders, bullish, right? Others like channel up and channel down, notice that we don't have it in this cheat sheet because those can really break out in either direction. Right? And you can trade it in either direction as long as it's in line with the trend. All right. Here are some of the success rates that we also highlighted last time to give you some guidance. What patterns should you bother with? Inverse head and shoulders, that's a bullish pattern. We talked about that as really being a very rare pattern. So if you find it, fantastic, but you won't find many of them. I think today, for example, if we look at that pattern, I don't think we'll find any results. Let's try. Inverse head and shoulders, nothing on a daily time interval, 4 hour, 1 hour, one on the 15-minute interval. Okay, here we go. So there is one here, and that's an inverse head and shoulders pattern that you could trade, and it's an emerging one. It's not a breakout yet, and then profit potential is very small right now, so it's probably not something we would trade at this point. So it is a rare pattern, but it's certainly worthwhile doing when it does occur. Doubled bottom as well, great one. We talked about horizontal resistance emerging, horizontal resistance breakout, channel down, solid. Head and shoulders, it's got a good success rate, but that's a bearish pattern, right? So if you were to be, if you were comfortable with shorting, then that would be your signal. Also support emerging or support breakout, obviously those are bearish patterns, so I'm not going to highlight those here. Double top, also a bearish pattern. Channel up could be both bearish and bullish. Triple bottom could be bullish. And then I really like falling wedge and ascending triangle as well. And then you get into some patterns that historically have had poor or less attractive risk reward or success rates. And I don't typically traffic in those. Just checking my notes here, make sure I hit everything I wanted to say. Great. So how do we look for these? Obviously, we've already explored one way of doing that, which is through the pattern section. Right here, you can find the pattern that you like. Let's try channel up. And if you just want breakouts, we can just do breakouts. Right now, we're on a 15-minute one. So let's go to a daily or channel down, right? Breakouts. You could say you just want those that give you buying opportunities, not selling opportunities, or you can just say we just want buying opportunities and just breakouts, right? You can kind of combine the filter the way your preferences are. Now there are other types here of patterns that fall into a Fibonacci patterns. So these are the subtypes of Fibonacci patterns, A, B, C, D. Some people swear by them. We don't have historical performance on these. I don't trade them mostly. Really more advanced traders could find some opportunities here. Really, some people, like I said, really swear by the ABC pattern, for example. So over time, maybe you can leverage that as well. We have some consecutive candles patterns. Those are, again, patterns or really situations where a price has multiple consecutive days or periods of either down or up closes. And the idea is that there could be a bounce or a sort of counter trend move following these consecutive down days or consecutive up days, a bit of a reversal to the mean, especially if we're talking about situations where we're reaching a support level. For example, here, Let's look at this situation here. Now, mind you, your trend is down and down. In the long term, it's up. So this could be a bit risky. But what I like about this, for example, is that not only have we had multiple down days, but we're also approaching the 200-day moving average, which is typically acts as a solid dynamic support level. So this consecutive candles could be of interest or could be leveraged. And then the last one on the list that we have are big movements. And that's somewhat similar to the other one in that basically it warns you or alerts you that there's been a big movement and there could be some kind of reversal. I would sort of combine this with an overbought or oversold RSI. I'll show you how to do that. But so one way to find these trading ideas based on chart patterns is to do it right here on the patterns section. Another way would be on the screener. You have also access to the patterns, and there the advantage is that you can combine it with some other indicators. So let's do that here. Again, we'll go to trading patterns, subtype. I want ascending triangle. Great. But and I could also again combine it with emerging or breakout or direction, perhaps bullish or bearish. But by the way, let me mention this. You cannot combine multiple subtypes together. So you cannot say, I want ascending triangles and I also want channel ups. You can only create the filter with one of these at a time. You can create multiple filters, but not one filter with multiple subtypes. And because a pattern cannot be an ascending triangle and a channel down pattern at the same time. And so, but you can pair it up with some other data. For example, I might want to say that I only have Binance. So I want Binance Exchange here. And then also I could say minimum market cap, or more importantly, I could say I only want those that are in an uptrend on a medium term basis. So make sure that I'm trading with the trend, okay? And then we're really down to one because one of them is a stable coin, or actually two here, nulls and Pearl, well, actually three. Here we go. And so these are basically the ones that we saw earlier on the patterns page. But the benefit of this is then again you can filter or add additional filter criteria to say that I only want those that are in an uptrend, or only those that are on the Binance exchange, or perhaps some other criteria. So I talked about the consecutive or the big movements. So let's open up another coin tab. One way to do leverage that would be to say on the trading patterns subtype would be the big movement. And then I would say that if there has been a big movement, I want to see those that have been that are very overbought and could be right for a correction. So I'm going to combine it with an RSI 14 oscillator that we talked about in the past and say very overbought, so over 75. 9 of them. Let's take a look. Okay, so some of these indeed have had huge moves. And Loopring, for example. Let's take a look at that one in greater detail. Great if you were long, obviously, but it's had a big move, several consecutive days of up, and there could be a reversal, or not a reversal, but a correction, because the RSI here now has reached really extreme levels. RSI, as you remember, oscillates between 0 and 90, with 100 being, 0 and 100, and 90 is really at the very extreme level. So I wouldn't be surprised to see 1 or 2 red candles here at these levels. But so that's just to show you the potential of using the screener to combine the patterns with other indicators. And of course, you can save the filters as well, and you can quickly then return to those filters in the future. The other way or other area where you may find some interesting trading ideas is, again, curated charts, which are technical analyses set up by our own internal team of analysts, where we analyze about 35 altcoins, some of them larger cap altcoins. And there you can also find some pattern types that you're looking for, whether they're bullish or bearish, or whether they're breakouts or emerging. So this is another area of potential of ideas. For example, descending triangle is Cardano. You can check the trends here. So actually Cardano right now is really got a mixed trend picture, but there appears to be a breakout, as we indicate in the text here. Descending triangle, breakout. So let's take a look at it, or maybe a better way. You can also find these curated charts in the screener, by the way, and I want to blow it up a bit, and it's easier to do that from here. So in the curated charts tab here, I'm going to blow up this curated chart. And you can see we had a descending triangle really that's formed since late August. So we're talking 3.5 months. As you can see, the descending triangle is the opposite of ascending triangle, in that every time the buyers bought it up, the sellers were even more aggressive at selling it, and we're selling it at lower and lower prices. And the prices just, continuously approach the $2 support trend line. But as you can see, the selling has started to ease up, and what looked like a descending triangle started to converge and really turn into more of a sideways action. And now we've had a decent breakout here in the last couple of days. And in fact, the price, this is one of the things that we'll cover in a minute, the price actually exceeded the prior swing high. If we say that this is a high, so that to me is a confirmation of a breakout. And sometimes getting involved right at this breakout of trend line, it's, we talked about breakout failures and fake outs in the last lesson. They happen, and so sometimes being really aggressive and being really early on that breakout doesn't pay off, because I sometimes it's better to wait for a day or two, or for an hour or two, if depending on the time interval you're on, unless you see some other supporting evidence like very large volume, which we did here, very above average volume when you compare it to the last 2 months. So that's another confirmation of the conviction that the buyers had when they started buying it at these levels. So I'd say this is a solid breakout, and I would be actually very interested in buying this breakout from the descending triangle. Okay, but the point is, you can find some decent trading setups in the curated chart section as well. So we cover that. And of course, the price alerts, encourage you to use that tool as well to give you to help you stay on top of the market in terms of the breakouts of support and resistance areas. Now, let's look at some specific situations. Descending triangle, again, one of my favorite pattern setups, because it clearly demonstrates the intent and the eagerness of the buyers to be willing to buy it at an increasingly higher price. And eventually, typically, the ascending triangle resolves in an upward breakout. So when the breakout happens, first of all, you want to make sure that it is indeed in an uptrend, right? As we already mentioned. So number one, is it in an uptrend? And then we saw consolidation, right? It reached certain levels where the sellers or even some owners or holders began to trim their position. And until they found that the supply demand found that equilibrium, it took several swings and oscillations between these trend lines, and then it broke out. So how do you enter them? Well, in this case, you enter pretty much when you see a solid volume, strong breakout above that resistance area. It helps if there's also a MACD crossover perhaps, but that's not necessary. More importantly, what I wanted to demonstrate here is where do you set the stop loss and what's your target? And what I love about the triangle formations or patterns is that they give you clear rules of what to expect in terms of price target and where to set the stop loss. The stop loss you typically set at the just below the last swing low, right? If you look at the pattern here, right? The swing lows was higher here, higher here, higher here, and this was the last swing low before the breakout. So when you enter the trade, you would put the stop loss just below the last swing low. And then what's the target? The target typically is the width of your triangle. And this is the same for descending and symmetrical triangles as well, is the width of the beginning of the triangle is typically what you would expect the target to be. Okay, so the target level from the breakout level is the same width or same distance as the width of the triangle here. So that's the nice part about triangles, that you do have some clear rules on where to put the stop loss and the target. And again, descending triangles have a decent success history, right? Descending triangles, 69%, 70%, very solid. You should be 2/3 of the time, right? And also like the fact that typically they happen in an uptrend. So you typically or should always trade in with the trend, but it's essentially a continuation pattern. So there's an uptrend, then there's a consolidation, and then the uptrend continues. That's a continuation pattern. Now the other one of my favorites is falling wedge. A falling wedge is formed by two downward sloping trend lines. And it can happen in an uptrend or in a downtrend. If it happens in an uptrend, then it's a continuation pattern. Typically, it will, well, actually, in either downtrend or uptrend, the typical breakout is to the upside. If it's in the uptrend, then it will most likely continue the uptrend. So it's a continuation. So if you look at the cheat sheet again here, right? Falling wedge here. If it happens in the uptrend, it typically breaks out in the direction of the uptrend. So it's a continuation. If it appears in the downtrend, then it's a reversal. It will reverse the downtrend and to the bullish, to the upside, and therefore it's a reversal pattern, and the typical direction is up. Again, this is typical. A falling wedge in terms of success rate is similar, I believe around just under 70%. So no, it can 67%, it can break out in either direction. So I wouldn't necessarily anticipate the breakout, but wait for the breakout. And recently we saw some really good examples of that reversal. In fact, And we can take a look at that in the curated charts. I recall that VetChain had a, and there were several of these. VetChain had just a beautiful falling wedge that occurred sometime in October. Actually, that was, it started in September and the breakout occurred sometime in early October. As you can see in the curated chart that we still have out there, here is the falling wedge pattern. Overall, actually, the trend on the long-term basis, I believe at the time was down. On the short-term basis, it started already, as you can see, going up, and now, and then it really sort of consolidated. It broke even on the 200-day moving average. It wasn't looking good, but what the falling wedge pattern indicates to us is that initially there is heavy selling pressure, but the buyers start stepping up and the selling pressure starts to ease as the trend lines begin to converge, indicating that the selling pressure is easing, the buying pressure is growing, and that the declines in the price are moderating, in fact, turning into almost a sideways action. Again, this pattern I identify just visually through some experience. Typically, visually, what you have to do is you look at and connect swing highs with, and then for the resistance trend line, and then on the support trend line, you look at swing lows. Swing, here's a swing, right? Every one of these sort of like, this is a swing up, then there's a swing down, then there's a swing up, then there's a swing down is here, swing up, right? Swings ups and downs continually. This is what prices are doing. And so then when you start connecting the high points of the swing ups and the low points of the swing lows, then you might start seeing some patterns emerge. But oftentimes there is no pattern to be identified. But in this case, it was a really solid falling wedge pattern that experienced a breakout right here. Now, the confirmation really, especially when you have somewhat of a mixed trend overall, it would be risky to jump on right at the breakout. It helps to wait until the price breaks above the recent swing high right here. So really, it wasn't until the second day when the second candle closed above, right here, above that prior swing high, when I would feel comfortable that this is a real breakout. And the other evidence here, however, at the time, and we say that in the presentation, it also helps. Sometimes you find more supporting evidence, in this case, an RSI convergence. And I think we talked about this in one of the lessons when we talked about RSI and RSI convergence. But here, as you can see, the price in the two swing lows, right? This is one swing low, this is the second swing low. The price made a lower low, but RSI actually made a higher high. Right here, right here. Okay, indicating that while the price is down, the declines are actually have decelerated dramatically. And that's what the relative strength index is indicating. And that divergence, RSI divergence, was additional supporting evidence that this breakout is for reals. Great. So that was the falling wedge pattern. Let's look at the presentation in terms of the entry and stop loss for that pattern. This is ascending triangle. Here's the falling wedge. So again, you've got could be an uptrend that consolidates in the falling wedge and then breaks up again as a continuation, but it could have been a downtrend that basically reversed. A falling wedge typically has a bullish breakout or bullish resolution. Again, you should wait for the breakout, not anticipate the breakout. I mentioned this here, that confirmation is nice to see RSI divergence or really robust volume, a really strong break, not just kind of a small, peaking their head above the resistance trend line. Mind that sometimes waiting for a day or two is totally fine to avoid the fake outs. Now the stop loss, where do we put the stop loss? Again, same with the triangles. The stop loss will go just below the last swing low. This last swing low was about right here. And the target similarly. Now, let me back up. The entry, as you can see here as well, the entry is typically recommended at a point when the price breaks above the recent swing high. So it's not always right at the moment when there is a break through the resistance trend line in this case. Really, to be safe, it's recommended to wait until we actually break above that recent swing high. And then the target is really the same as with the triangles. The width of the wedge, the beginning of the wedge, the width of the wedge is my distance from entry to target right here. So this width is the same, or this distance from entry to target is the same as the width of the wedge. And if you look at the real life situation with vet chain, that's what happened. It actually, the width of the wedge was right here. And in fact, from this point, it totally reached that target. It took a while. I mean, we're talking about a month and a half, but of course you could set the target a bit lower. If you're, you can keep that risk reward ratio, 1 to 2, right? If we put the, if we enter right here and my stop loss is here, so let's say that's, in this case, we're talking about 10 cents here, entry maybe at 12 cents. And my downside is about 7 cents. So that's 5 cents difference. So that my risk is 5 cents. Then I can say my reward should be 10 cents to keep that 1 to 2 risk to reward ratio. So I need to add 10 cents to 12. 10 cents to 12 would be 22. Well, we're getting to that 20 actually, right? So let's see if we have some questions here. Do I see an RSI divergence on LRC on the 4-hour? Okay, I'll take a look at it. So that's the vet chain and the falling wedge pattern. Good. So let's go ahead and quickly take a look at LRC. Let's see what patterns do we see in LRC. There's a big movement, but you mentioned the 4-hour rising wedge. Okay, that's a rising wedge, which is actually typically the opposite in terms of the potential breakout, right? Rising wedge is typically breaks to the downside right here. So if it appears in an uptrend, which it is an uptrend with loop ring, it typically breaks to the downside. So beware. And you ask me whether I see an RSI divergence. So let's take a look at the chart. So the divergence, let's take a little less data here. So let's see. So the divergence in this case would be if the price was declining and the RSI was increasing, but RSI is declining. It's really going in the direction of the price as well. Okay, so in this case, there is no divergence. It seems to be kosher with how the price is behaving, and RSI is also headed in the same direction. I'm just looking back to see if I see an RSI divergence perhaps in the history here that I could demonstrate, but not at this point, not in this chart. All right, let's see if we can put on the trade. Let me check for falling wedge patterns and see if we see anything interesting. So these are emerging ones. I don't want to be shorting right now. Overall, the market is still bullish. I think shorting would be a bit risky. Here's one breakout here. And in fact, again, it's okay to actually look at some older patterns sometimes, because that gives me some time to assess whether that breakout is real or not. Okay. I mean, here's a pattern. Here's a breakout. We've had actually 3 days pass since then. It hasn't done much. You know, we're still, you know, typically we want to wait for about 10 days is typically, or 10 periods. If you're on an hourly time interval, then you would be in the trade for 10 hours. Typically within, if the price were to hit the price target, it happens within the 10 periods. In this case, 10 days. But I would say that, you know, this breakout, I don't see much confirmation. It broke out and it kind of closed below that first breakout candle for a couple of days in a row. The last candle is a bit of a indecision candle, so I don't see confirmation here. Let's see if we see anything interesting on the ascending. Oh, actually, maybe we could also go on a different time interval. We can go on an hourly one. Now, with lower time intervals, you will have shorter trades, but typically also lower upside. Okay, I'm looking for a breakout. Of course, I could just do this, and we don't see a breakout on an hourly time interval for falling wedge. So let's go to ascending triangles, for example. LTO. Okay, this is an emerging ascending triangle. Looks okay, but relatively small upside, about 6%. If I go to an hourly, daily time interval, this is something that we looked at already, right? These are, again, emerging ones. I could certainly trade that. I'm looking for maybe a breakout here. Let's go to breakouts. All right. And we want to be buying things, not selling. So that helps us a little more. Okay. We've got, all right, we got Litecoin. And the upside potential is pretty decent, 32%. Let's look at the chart here. Oh, in the meantime, we have some questions here. Nulls looks nice. All right, I'll check it. Litecoin, the old school Litecoin, boy. All right, so the indication is that we saw a breakout right? If I open up this, that basically the system picked up that there was a breakout at 250 level. I would agree with that. In fact, we probably have the same level in curated charts. And then we had a bit of a pullback and another candle that's yesterday was a kind of an ugly day across the board. So that's the pullback yesterday. But I would agree that this has the potential to keep moving. We've got a recent MACD buy. RSI has crossed over 50 level, and you know, more important than anything else is really pretty solid volume on the breakout day as well. So decent confirmation of the breakout. It says here that, you know, the anticipated day number of days that this pattern could take to reach the price target is 56 days. That seems like eternity, but for 10 days, I would probably put the trade on. Someone mentioned nulls. Okay, let's take a look. Feel like we already saw it today, didn't we? Oh, right. Indeed. Yeah, I mean, I do like this emerging because it's kind of bounced back to the support level. My guess is it's gonna, this was 2 days ago, so we got two candles, right? We got two extra candles now. 2 days have passed. It's up 1% today, not much, but it's got a decent upside, about 40%. Let's see if it's on Binance, because that's what I'm, oops, not Bitfinex, but Binance. Okay, it is. So we can certainly consider that. I'm sure Litecoin is there as well. And I saw another situation. It was a KTS. Okay, and no, that's not it. All right, let's try it again. Breakout, buy, is somewhere here. Okay, I lost track of it now. Fair enough. We've got some triangle breakouts here. JST. Ooh, look at this triangle. Triangle in general, though, don't really have very impressive success rates. You know, they're all the way down here, 60%. Not something I'm crazy about, because triangles generally indicate indecision. Now, of course, once there's a breakout, then that shows that the buyers are more eager than the sellers. But I prefer ascending triangles. But as you can see, there is a triangle breakout here, with potentially a pretty big upside. Wow, this is a very big triangle from 9 months, forming for 9 months. Okay. Let's see, anything else here? Another triangle. Yeah, not too crazy about triangles. Got it. All right, so we've got Litecoin, and we have nulls. Well, let's go ahead and do that. Let's see another question here. At the same time, there's a head and shoulders on the patterns for 1 hour for Litecoin, right? Yeah, it happens. On a different time interval, you may have a different pattern appear. That will be sort of a shorter event. You could try to line those up. I'm not really sure if that's really necessary. But this on the daily time interval is a longer time, a longer trade setup. So let's go ahead and see if you got some cash available. Tether. Look at the chart again. Right, so our assumption is that this is an ascending triangle. The support line, support trend line is here, gradually increasing, while the resistance trend line area is up here. So our assumption is that we're going to keep bouncing off of the support trend line up towards the resistance. So that's where we want to buy it. And actually, the price is right at that. In fact, there's also a 200-day moving average, which is a solid support area or zone. So that lines up nicely with the support trend line of the ascending triangle as well. We want to limit buy. For some reason, we don't have an order book right now live, so I'm going to look at the price about 57.48. I'm willing to buy it as high as 57.5 and about $1,000 worth. So that would be about 800 units of nulls. Okay. All right, that order is placed. And the other one was Litecoin versus USDT. And right, here we go. So it's pulled back to that breakout level. So this was again an ascending triangle with the resistance trend line up here around 250, maybe even lower, while the support trend line was actually on a bigger time interval. I mean, not time interval, but time horizon. But right, the support trend line was about right here, like that. And the resistance is up here. Okay, so we had a pretty strong breakout, a bit of a pullback, and the target is then the next resistance or so, which would be about 340, 350. So let's go ahead and place this trade as well. Okay, we have an order book here. I'm going to make it a little higher. And in this case, 4 units would add up to about $1,000 worth. And that order has gone through. All right, guys, so that's it for trading the chart patterns. I know 1 hour does not do justice to this subject and trading strategy, but I think it gives you a pretty solid foundation of how to approach them, what patterns to focus on, particularly in an uptrend. You generally want to focus on those that tend to break to the upside, even though you're not anticipating a breakout, but it's always nice to have that potential upside. Also, trade with the trend, so narrow it down to those patterns that if you are going to be buying that are in an uptrend, also very important. And then stop losses, right? We didn't actually set the stop losses. I may do that here. I should do that here. So the most recent swing low here for Litecoin is around $200. So I would put the stop loss just under $200. Okay, so I can do that right now. But typically, again, stop loss orders, you place them below the most recent swing low, or a little bit below that, to give some room for swings and oscillations. So I said $200 limit, stop limit, sell. So I want it to be triggered when it gets to 190. I'm sorry, triggered when it gets to 190, and limit price, say 180. That's the worst price I'm willing to sell it for. Lack of funds. Stop, limit, sell. All right. I don't have quite 4 units left because of the fees on Binance, so I gotta adjust that. Okay, so now that order is sitting in my order book and will be triggered if the price dips that far. So that concludes today's lesson. I will share these notes and post them in the education area. And again, if you have any questions, feel free to email me at invest@alfins.com. And also have a fantastic weekend, and we'll see you next week on Tuesday and Thursday at the usual time, when we'll talk about some risk management strategies. And then on Thursday, we'll talk about shorting. And that actually can also be a form of risk management. If you've got a lot of long positions, it's good to have some short positions as well. So then when the market does tank unexpectedly, that can mitigate your downside. Thank you, guys. Enjoy your day.